should I go with SJPs or physical gold?
The best way to allocate money to gold now is gold ETFs or gold mutual funds. Yeah, physical gold, there are multiple problems like
I would not put an FD in a large nationalized bank because I can get better returns if I put in a small finance bank FD. You can get up to 9% returns on your FD.
I have given 23 lakhs to the investment advisor, continued doing SIPs. In 2022, I see like it has grown more than a crore, and just in 1 year it went up to 1.7.
if you end up splitting SIPs goal-wise, then unfortunately what will happen is you will add so many funds to your portfolio that you will end up over-diversifying yourself.
A lot of people I meet in my life who are like, Sharan, I make 25 lakhs per annum, but I still feel poor. I'm not able to save anything. But this is a prime example of somebody who is having a very similar income, and we're going to see very soon what this net worth of this individual is. Have you calculated what is your XIRR on your direct stock portfolio?
It was around 22%.
If I go to Nifty's returns, right? CAGR 5 years is 27.7%. So if you had just directly invested in the index, you would have gotten 27.7% 5-year return.
At this point of time, we are assuming that taxation will be 12.5 long term. But by the time I reach my goal, I think this taxation will also increase. If I calculate like that, will I be able to achieve 5?
Hey guys, welcome back to another episode of the Personal CFO, where we conduct a detailed, comprehensive financial planning analysis exclusively for 1% Club members. On today's episode, I'm also joined by Mr. Kirtan Shah, who is the co-founder of Credence Wealth, a leading wealth management company who works with HNIs and ultra HNIs. And Kirtan, with almost 15 plus years of experience, is managing close to what, 2,500 crores? So let's begin. On today's episode, we have Mr. Tata Ashok. Ashok is a 42-year-old man from Hyderabad. So before we begin, let's introduce Ashok to this session. Ashok, can you tell us a little bit about yourself? What do you do? What is your designation? Can you tell us a little bit about yourself?
Right, Sharan. I'm 42 years old. I'm from Hyderabad, born and brought up in Hyderabad. I work for South India's largest educational chain called Sri Chaitanya as a brand manager. I look after branding and marketing activities there. I have 14 years of experience there. Okay, I started investing into stock markets via mutual funds from 2010. 2010 to 19, it was completely onto mutual funds. Later in 2019, I sold everything and started to invest slowly on my own ideology. Earlier, it was given to some broker. So there the journey started and COVID hit. So during the COVID time, so I got an opportunity to scale my investments so that I've decided to make it two parts. So one part of it, I've managed myself, and the other part I have given it to PMS.
Okay. Very interesting. Cool. So let's start off with your cash flows. Before you start with investments, we need to understand exactly how much you can invest every month. So why don't you tell us a little bit about your salary, about your income sources and your expenses? Can you just walk us through that?
So my salary right now is 23.5 lakhs per annum. So after deducting my income tax and other charges, I get a net take-home salary of 1,68,000. And there is a rental income of 12,000 rupees, which I own. I own a 2 BHA apartment, which I bought 3 years ago. So I get a rental income of 12,000 rupees. On and all, total of 1,80,000 is what I earn. I'm the sole breadwinner of the family. Nobody.
So this 2 BHK apartment, what is the value of this?
When I bought it for 42.8 lakhs. Now the value of the apartment is 60 lakhs.
60 lakhs. Okay. Now, so you're the sole breadwinner of the family, you said, correct?
Yes.
So you're making 1,68,000 post-tax, and then 12,000 rupees rental income. So totally you're making 1.8 lakhs per month. Now coming to your monthly expenses, can you tell me where and all the kharcha is happening?
Around 25 to 30,000 rupees is my monthly expenses, where it goes to maid, electricity bill, internet bills, and there is a 6,000 rupees component which I spend for my car fuel, etc. And that's about it. It is.
So all put together, 30,000 rupees is your monthly expenses, which includes your car fuel also, right?
Yes. On my
wow. 20% of your expenses is car fuel. Man, that is very, very interesting. Maybe you should consider switching to EV then, because you have a lot of net worth. We will come to that, but that can significantly lower your monthly outflows. And your loan EMI is 42,600. Can you tell us a little bit about that?
37 lakhs is my housing loan when I took that loan, wherein I'm paying 36,000 rupees for monthly EMI for 15 years. And I have a car loan also running. It has a 6,600 as a monthly EMI.
So car loan outstanding 1 lakh, home loan outstanding 36 lakhs.
Yes.
Okay. So all put together, that's a 42,600 rupees per month in EMIs.
Yeah.
So that is about 25% of your income, which is a very healthy debt to income ratio.
I think compliments to Ashok, because there is, while it is individualistic, but largely 30% of your income as expenses and 30% of your income as EMI is considered extremely healthy.
Yep.
Right? He's way below both of these numbers.
Yeah.
And which is why his investable surplus is what it is, and which is exactly why he's been able to accumulate that kind of net worth that we will see.
Yeah, we will see that. It's a very, very shocking net worth figure we're going to see very soon, guys, because a lot of people I meet in my life who are like, Sharan, I make 25 lakhs per annum, but I still feel poor. I'm not able to save anything. But this is a prime example of somebody who is having a very similar income. And we're going to see very soon what this net worth of this individual is. So let's find out that very soon. So all put together, 76,700 is your monthly expenses. And you're able to invest 1,03,000 rupees every month, which is phenomenal. So that is your cash flows. Now let's finally get into your net worth. So currently your total net worth, Mr. Ashok, is 3 crore 18 lakhs 20,068 rupees. So you're almost 500,000 in terms of your net worth. So can you tell us a little bit about how you accumulated this net worth? How long have you been working for?
14 years now.
14 years. And what was your first salary?
My first salary was 5,000 rupees a month.
From 5,000 rupees per month to today earning 1.7 lakh rupees per month, and you have a net worth of 3.2 crores. Can you tell us a little bit about that journey? How?
I told you when I started investing in 2010, I started with 10,000 rupees SIP, and whenever I get an increment, I used to add up. I did not count it as like 10%, 5% or so. But whenever I have my surplus money, I used to invest in mutual fund route. That went up to 33 lakhs of corpus by 2019. So unfortunately, in 2019, my father had passed away. So I had to take out all the investments so far made, because it was running through a local broker who was a friend of my dad. So I thought I sell everything and go with discount brokers like Zerodha, so that I can manage it easily. So, and then I thought like I'll hand over some 20 lakhs to the investment advisor and keep other 10, 15 lakhs with me. So that's how the journey started. I have given 20, 23 lakhs to the investment advisor, where he parked stocks and mutual funds initially. And then 2020 to 2022, I have continued doing SIPs into the PMS at a rate of 80,000 rupees a month. Okay. Parallelly, I started working on my own investments through Zerodha. And I couldn't see like automatically in 2022, I see like it has grown more than 1 crore. And just in 1 year, it went up to 1.6, 1.7 crores.
Very, very impressive. What do you think, Kirtan? What do you think of this guy's story?
I think outstanding. The biggest takeaway, in my opinion, very honestly, is I think if you are able to manage cash flow in the way Mr. Ashok is, I think anybody can reach this kind of numbers pretty soon.
Yes.
Absolutely. So, Ashok, your current asset allocation, which is basically if I look at all your investments and divide it into equity, debt, gold, real estate, and if I make a pie chart out of it, this is what it is looking like. 69% is in the stock market, 23% is in real estate, and 7% is in debt. Now, I'm not including your home where you live because I don't consider that as an asset which you can sell, right? Because that's your emotional purchase. And I'm not including your jewelry as well, because again, I will not expect you to sell your jewelry just to invest it in the market. So if I exclude those two things out, you have an investable asset of 2.15 CR, and this is how it is divided. Now, the next part of this analysis is for us to understand whether it is in the right places or not, right? So for that, we need to understand what are your financial goals. Because as you learned in the 1% club, when watching the modules, that everybody's financial goals are different and unique. So I'm going to go into your financial goal sheet now. Okay. So emergency fund, you required 7.2 lakhs, which is basically your monthly expenses multiplied by 12. So your monthly expense is actually around 80,000 rupees. So if I multiply that by 12, it should be about 9.6 lakhs, right? So I'll change that. Okay. So that is done. Car you don't want. Higher education for your son 8 years from now, right? So that you need 20 lakhs as per today's value, right? Perfect. Your fire number you've written as 2.4 crores today. How have you calculated this fire number?
From one of your video session, like my annual expense into 25 is what I have calculated.
So your annual expenses today is how much? 9.6 lakhs.
Yeah.
Multiplied by 25, all right, 2.4 CR. And your vacations, 1 lakh per year. Electronic gadgets and clothes, 75,000 rupees per year. Your kid's marriage, I'm assuming this is your son only?
Yes, son.
So 8 years you'll get him educated and also marriage, same time?
No, not in the same time. Maybe currently he's 9 years old. Maybe 14, 15 years from now.
15 years from now. Perfect.
That's also early.
Okay. So that is the amount required today. Now, I'm not going to get into the amount available right now. I'm just going to look at goal inflation. So now each of these goals have an inflation associated with it.
Yeah.
So something like your emergency fund, because it's required in the next, it's a short-term requirement, I'm just going to put a 6% inflation. Education is usually a very high inflation, so I'm going to put 10%. Fire number is basically your retirement, I'm going to assume 7%. Vacations usually is very high, flight costs and hotel costs increase very fast. So I'm assuming again 9%. And electronic gadgets, again, we'll put like 9%. And kids' marriage expenses also increase quite fast. So I'm going to assume 9% for that. So this is the amount that you require in the future. And here we have assumed your step up, meaning how much you can increase your investments every year. What do you think is a good step up that I can assume for you?
Maybe 6-7%.
Fine, I will assume 7%. You can increase your investments by 7% every year.
Yes.
Okay. So that is done. Now comes the important part, right? We need to understand from your existing money, how will you allocate it towards your financial goals? That is the next step. So emergency fund, obviously that's the top priority. So straight away I will allocate 9,60,000 here. So you don't need to save any extra for that because you already have that 9.6 lakhs. Now coming to higher education for your son. So you have how much here? 2.15 CR left.
One more point. For my higher education for my son, when my son was born in 2015, I had taken a mutual fund worth 1.5 lakhs, and there onwards I also started doing a 3,000 rupees SIP. So, and whenever I have some small surplus cash of 10-15,000, I used to add, and the purpose is right now 9 lakhs.
Got it. So now that is one way of looking at it, by saying that, okay, this mutual fund is for this purpose, mutual fund B is for marriage. That is one way of looking at it. But what I personally do is I look at it from an overall level. that by looking at all the financial goals, this is my asset allocation. And whenever that goal comes close, my asset allocation has already taken care of it by putting more into a safe asset like debt or FD, so that money is available for me when that goal comes closer. You understand? So that is what I look at. What do you think? How do you look at it?
No, 100%. I think if you, kind of theoretically end up splitting SIPs goal-wise, then unfortunately what will happen is you will add so many SIPs or so many funds to your portfolio that you will end up over-diversifying yourself.
And he has actually done that also. If you look at this, at this.
Correct.
So many mutual funds he has purchased.
So I wanted to tell you, in the mutual fund section, okay, these guys manage my portfolio of 25 lakhs worth of stocks and all these mutual funds listed here.
Sure.
Around 85 lakhs is with them.
No, total mutual funds that you have is 60 lakh, 24,000.
Plus 25 of my spouse account.
Got it. So 85 lakhs total is managed by this company.
By this company, yes.
Got it. Now let's go back to your financial goals. So to your question about higher education for my son, I think looking at as this fund for this purpose, this fund for that purpose, like Kirtan also mentioned, becomes a little confusing for most people. And also it ends up resulting in over-diversification because you end up purchasing many funds. So the right way to look at it is to look at it from an aggregate level and see that whenever the financial goals are approaching, your overall asset allocation becomes more skewed towards debt. So that money is easy to liquidate once that goal is coming closer. So we don't need to get into, okay, this fund is for this fund is for that. We look at it from an overall level. Yeah. So we will come to that towards the end, where we understand what is your overall asset allocation supposed to be. Right now it's incomplete because we haven't finished this exercise yet. Okay. So higher education for your son, I think you already have the corpus. So you can already allocate the entire thing, right?
Yeah, absolutely.
So you don't have to, save for it separately. So that is done. Khatam.
Right.
So you don't have to take any loan for your son in the future. So that is taken care of.
That's the idea. Yeah.
Now I think before we get into your FIRE number, we'll just take care of your vacations. So let us prioritize your vacations 1 lakh every month, every year, and keep that aside. So that is also taken care of. So you don't have to save for your vacations every year because again, you already have the required money. Now electronic gadgets also we can allocate 75,000 rupees per month. And your kids' marriage also we can allocate 20 lakh rupees. Done. So everything is done, right? So only thing left now is your FIRE number, for which you have available 1 crore 63 lakhs left. So we'll put that here.
Yeah.
1 crore 63 lakh 85,067. Okay.
Yeah.
So that is done. So now the beautiful thing is you don't even have to save for that because this amount itself will grow into your FIRE number in the future. Because how old are you today?
42.
And when do you want to retire?
Maybe by 50, 55 max, 8 max.
So you put 12 years from now.
Yeah, 52.
So this amount itself will grow into a very big corpus. So you have nothing to worry about. You have more money than what you need right now. Everything is taken care of. So this 1 crore 63 lakhs that you allocated for your FIRE number will become more than what you need. It will become 38 lakhs more than your FIRE number. Does that make sense?
Got it.
So what do you want to do? What is your problem now? You tell us. What do you want us to do?
So keeping the inflation and taxation in part, because right now at this point of time, we are assuming that taxation will be 12.5 in long term and 20 in short term. But by the time I reach my goal, maybe in 10 years from now, I think this taxation will also increase. If I calculate like that, will I be able to achieve FIRE with these kind of numbers? And
what do you think, Kirtan?
Ashok, I think you will very easily be able to do that, and I'll tell you why. Look, whatever net worth that you have so far, if we allocate that entire net worth to all your goals, like Sharan said, you don't need to invest any more money, right? Now you have 1,03,000 every month additional surplus that can go into investing. Now, if you look at 1,03,000 every month over the next 12 years.
So I'll just put that in one of our tools.
Yeah.
So we have the SIP tool here, right? And we'll do a step up also because he's increasing his income by 7% every year.
So let's say you do 1,03,000 every month, right? And you step it up by 10%, 7% he said, right?
Yeah.
You step it up by 7%.
And even if you assume 10% returns post-tax.
Post-tax, after 12 years,
Yeah.
you're going to have a staggering 3 crore 84 lakhs additional money, right? So I don't really think you really want to be bothered about whether or not the assumption of taxation going up will make any impact on the way you are looking at achieving your goals, because you have enough and more money. Don't worry at all. Even if the tax number goes up, in the future you will still have enough and more money to retire. So
Absolutely.
I don't really think you should really be bothered about it.
And one more thing, if I may put it, his expenses, right? He has assumed 80,000 rupees per month expenses.
Correct.
Let's say at the time of retirement, which is 12 years from now, if I inflate it, what will be the number? Let us say.
Actually, you don't even have to bother about it, Sharan. I'll tell you why. Because he's got a 36 lakh rupee loan, for which there is an EMI that we are considering of 42,000, right? It is going to get over when? Ashok, when is your loan getting over?
See, I have a 36,000 EMI plus a car loan of 6,600, both together 42,600.
Sure. When is your home loan of 36,000 getting done with?
36 lakhs.
From now.
36 lakhs.
14 years from now. I've taken it for
Okay.
15 years.
So then that's the beautiful part, because then your savings will become even more because your EMIs will end.
Correct.
So then it is like you will be able to, your expenses will be even lesser. It's not going to be 80,000 rupees per month, right? So your actual expenses is only 30,000 rupees per month.
Okay. I'm also thinking of selling this property, and then after paying capital gains and all, I'll be getting some 20-25 lakhs in hand.
Which property?
The 50
Can
lakhs one, that is.
I wanted to put them in debt because I don't.
Your second property, that 50 lakh house.
Yes.
See, there are two things that I will tell you. First, of course, I had the same view that you should, kind of get rid of this real estate because it's not making any rental yield and hence no sense. From an asset allocation perspective, your allocation to debt and gold is very close to zero, right? I'm not considering jewelry because you're not going to sell it if the price goes up or the other way around, right? So you should definitely increase your allocation to debt also, and you should increase your allocation a little if possible to gold also.
So let's look, right? What is your required asset allocation? So this is what you're supposed to be doing. Ashok, can you see this?
Yeah, I can see that. Yeah.
So we've allocated all your existing money as per your different financial goals, right? And depending on whether it is short term, medium term, or long term, this tool will automatically fetch the asset allocation. So this is something also you can play around with, right? This is the thumb rules that I personally follow. So his point about post-tax, right?
Yeah.
This 11% you can assume as post-tax, aram se you can make.
Yeah.
Right? Because even if you make 15-16%.
You are saying with 11% post-tax return on my portfolio, what I'm holding right now will make me financially rich by the end of the time, maybe in 10 years.
No. You are already rich. You're going to be richer. That's the thing.
If I can put that in context in terms of numbers, Ashok, so that you understand, with these conservative numbers, we are saying that you will achieve all your goals. In fact, you will have 38-39 lakhs of surplus on your FIRE number. Plus, if you do a lakh of rupee a month as SIP, step it up by 10%, you will have additional 3 crore 80 lakhs. So you have enough and more money for all your goals. Plus, you are going to be much wealthier than you are today.
Now, crypto, if you don't want to put in crypto, it's fine. You can just park that in gold instead.
Gold,
Yeah.
yes.
Right? So you can just make that change over here. Let's say you want to make crypto 0 and gold, you want to make it 10.
Yeah. So what do you suggest in gold? Should I go with SJBs or physical gold in 24 karat format?
The best way to allocate money to gold now is gold ETFs or gold mutual funds. Physical gold, there are multiple problems, like you will have to pay a 3% GST. The price of gold is not really mirroring the market price. You will typically pay higher when you want to buy gold and pay lower when you want to sell your gold. Plus there is 3% GST.
Right.
So I would rather suggest you do gold ETFs or gold mutual funds. That's the best way to allocate to gold.
Right. I agree. But yeah, so this is how you will allocate your existing money, Ashok.
Sure.
All right. So now we have done the high level overview. Now let's go deep dive
Yeah.
and see exactly what is happening in each of your assets. So, because see, we have assumed here that you can make 11%, 10% returns. Now, if you're coming over here and spending 1 hour with us, you're obviously expecting, how do I make 14, 15% returns? So for that, we'll go deep dive into every asset and see what is the individual investments that you need to make in every asset, which is going to get you the best returns and pay the least tax possible. So that's what we're going to do. So let's start off with the real estate. Here, I think we already spoke about, which is your home is your home, so you keep that. But your other real estate, like Kirtan pointed out, is giving you only 2.4% returns pre-tax. So that is obviously bad investment. So that you can sell and liquidate and park it in either other real estate options, like you could purchase some fractional real estate, commercial space, 60 lakhs, you can easily buy a commercial space in Hyderabad and give it for rent. You can get even a 5 to 6% income on that, and even the property appreciation will be more. So there you can make a 10% return instead of parking the 60 lakhs in a 2 BHK house, right? So that is one excellent option for you.
Okay.
Now coming to your equity, I think here there is a lot of things that we can see. So Kirtan, what do you think? You've done some analysis before this call started. So what do you think?
Ashok, first at the macro level, okay, while we will go micro a little, but at the macro level, there is one suggestion that I want to give you. If I look at your direct stocks and I look at your mutual funds, I see a small disparity between your allocation to large cap, mid cap and small cap. You have 19% allocation to small cap and you have 40% to large and 40% to mid. Now, I'm not sure if this is done on purpose or not, but in my opinion, if you have 14, 15 years or even 10 years of investment horizon, equally splitting between large, mid, small, 33, 33, 33 will make a lot of sense on a risk-adjusted basis. So my first suggestion to you is to increase allocation to small caps. If I have to go slightly micro, there is probably this premier investment that you've done in the mid-cap space. That is something that I thought you might want to relook at because fundamentals are not that great.
So maybe if I ask you a question, Ashok, have you calculated what is your XIRR on your direct stock portfolio? Do you know that number?
Yes. It was around 22%, 23%, somewhere.
And over what time period is this?
Over 5 years.
5 years, 22%, right?
Yes.
So if I go to Nifty's returns, right?
Let's look at mid cap.
CAGR 5 years is 27.7%. So if you had just directly invested in the index, you would have gotten 27.7% 5-year returns, right? So this is very important to do because then it's like, okay, why are you investing directly in stocks? Are you able to beat the index? If you're not able to beat the index, then you've just wasted your time, right? Because you could have just blindly put that money in a normal index fund and that's it, right? So you should always look at, are you able to beat the index and is it worth your time?
Okay, I'll rework on it, yeah.
Yeah, so that's important. Anything else you would like to look at?
I think on the mutual fund side, I have a lot of suggestions. Okay, so specifically 3 large data points that I want you to look at, Ashok. First, the number of schemes that you have are far more than ideally what I would be comfortable given the size of the portfolio. I think 4,
When you mean number of schemes, number of funds?
Number of funds. 4, 5 funds would largely suffice for whatever is required, right? That's my first suggestion. So you'll have to bring down your 10, 11 scheme portfolio down to 4, 5, 1. Second, I am not sure, but I see a lot of allocation that you've done to thematic and sector investing. Like say, for example, you have Aditya Birla Banking and Financial Services, you have Bandhan Infrastructure, right? My biggest problem with thematic investing or sectorial investing, Sharan, is that you got to be correct twice, not once.
When to enter and when to exit.
When to enter and when to exit. Because 12 to 15%, very honestly, in a 33% large, 33 mid, 33 small kind of portfolio, which is well diversified, will easily be able to do. Sorry, I'm making this comment and making it look simpler and easier, but I think with the 8-10 years of investment horizon, this is quite possible.
Yeah.
But when you take thematic bets, right, you don't only have to be right when you are investing, but have to be extremely right when you are exiting also. I'll give you an example, Sharan, and I'm not sure if a lot of investors would know this. Infrastructure investing was at its peak in 2007, 2006 kind of era, before the Lehman Brothers crisis happened.
Yeah.
Right? Because infrastructure and real estate kind of investing did extraordinarily well then.
Yeah.
It took 10 years or more than 10 years for those infrastructure funds to come back to positive
From that crash. Wow.
Right? That is the level of thematic pain that you probably might see if you don't get the timing correct of exiting.
Got it.
Right? So thematic investing, I am very, very clear that if at all you know when to enter and exit, only then do thematic investing, otherwise don't. Right? So first was too many schemes. Second was avoid thematic. And third, there are a couple of funds that I think you might want to just go back and check in terms of whether do you really want to continue with them. One is the ICICI small cap. Another is the Motilal Oswal Focus Fund. These are two funds that I think, because I have to give you options to trim down your portfolio, I think you can look at these two funds. And I'm going to make fourth suggestion, which is the style of investing.
Right.
Most investors only look at the last 3 years of investment return and end up investing.
Correct.
Now, typically what will happen is market runs in cycles. And I'm going to give you an example. Somebody who started investing 10 years back would have a lot of HDFC and Aditya Birla in their portfolio. But did it do well after that? The answer was no, for a long time. Somebody who started investing 5-6 years back or 7 years back would have a lot of Motilal Oswal in the portfolio.
Yeah.
For the longest time, it didn't do well except the last 12 months. Somebody who started investing 3-4 years back would have a lot of Mirai and Axis in their portfolio.
Yeah.
Right? But did those funds do well? The answer was no over the next 3 years. So what is actually happening is when you look at the last 3 years of investment performance and invest, 9 out of 10 times you are in for not so great returns in the coming 3 years because markets are cyclical, styles are cyclical.
So you're talking about the value versus growth investing strategy.
Yes. So there is value, there is quality, there is growth, there is momentum. Ideally, when you're trying to build a portfolio, have a mix of everything in your portfolio because you don't know which style will work in the next 3 years. That's a big miss in this portfolio.
So here, what is he mostly invested in? What style of investing?
This is largely growth style of investing.
So it becomes a little bit more volatile.
Correct. There needs to be a fine balance by adding more value. And that can be done by adding more large caps, focusing on value style of investing.
Got it. Yeah, and also Ashok, if you've already seen, so we've in the 1% club, we've already given you these kind of tools. Like for example, this. So this is an index fund selector tool, mid-cap fund selector tool. So if you had used these tools, you'll be able to, identify what mutual fund is right for you based on your financial goals. So please use those tools. So if you go here, now let's go into the US equity investing. So here you've not invested anything in the US markets. What do you think, Kirtan?
I think it's always good to have a 5-10% allocation to the US market.
Right.
And why do I only say US? You look at the last 10 years data on a rolling basis, right? Across emerging markets and developed markets. It's only India and US which have been able to do a little better on a risk-adjusted basis,
right?
Being able to beat inflation. There is no other country, right, who's been able to on a 10-year rolling basis be able to do anything more than India fixed income.
Correct.
Right. So if you want to stay in equities, it is India and globally probably a little US.
Cool. Now let's get to your debt. Now if I go to debt, what I see is that a couple of things. Number one is that I would not put, an FD in like a large nationalized bank because I can get better returns if I put in a small finance bank FD. And because you put 5 lakhs, I know that my 5 lakhs will be insured in a small finance bank. So I can get better returns. You can get up to 9% returns on your FD, if you optimize this bit. I'm sure in Kotak Bank, you're probably getting 7% FD?
Yeah, 7.
Right, so that can go up to 8.5%, 9% as well. And if you can take a little bit more risk, you can also explore some NBFC FDs as well. I personally do that. I put in, Shriram Finance FD. I put in Bajaj Finance FD.
10%, 11%, 10%.
Exactly. So you can get those better returns. And if you want to go even more experimental, you can also invest in individual bonds of companies where you can get up to 11-12% returns as well. You want to talk a little bit about the bonds thing, Kirtan? How should we look at investing in individual bonds?
Oh, I think, investing in individual bonds is slightly difficult from a retail standpoint, because my problem with retail investors is that they will typically look at higher yields and then try and allocate.
Correct.
But what they really have to understand is that the higher the yield is, higher is the risk associated with investing, which they might not understand. I think you want to take that bet and want to go slightly higher on the risk curve, I would rather suggest that you allocate 50% of your money to long duration category in debt mutual funds and 50% to credit risk category in debt mutual fund.
Okay.
I think that combination will be liquid also. That combination will be able to generate superior alpha over other fixed income investment.
So right now he has no money in debt funds.
Absolutely. So I think he should look at doing, because he's going to allocate a large sum from his current allocation to debt. I think you should allocate large sum to long duration and large sum to credit risk fund.
There, what kind of returns can we expect?
Look, both of these are very cyclical, right? If you just look at the last 1 year, in long duration fund, they've done 13.5%. So because these are cyclical,
correct,
right? Currently, which is why long duration funds are doing very well. You might see another 6 months, you might see same kind of return out performance on the credit risk side. So combination of both of these can do easy early double digit kind of returns for investors.
Interesting. Yeah, and also I think the taxation component is pretty bad right now in debt funds, right? You will be taxed as per income slab. There's no indexation benefit, and Ashok will obviously be taxed at 30% for his returns.
That is the reason for worry.
That is the reason why he's not putting in debt funds. So how do you look at it from a taxation point of view, investing in debt?
See, 100%. If you look at it from a tax standpoint, these are not going to be great investments.
Yeah.
But very honestly, the way I look at investing, tax is incidental to anything that you do. It's not the reason for you to invest or not invest.
Okay.
Your prime objective always is to make sure that your asset allocation is taken care of. Everything else is incidental.
Correct.
So even if I'm going to lose out on 1.5% in that sense, because this is slightly less tax effective versus a hybrid, I would still want to do this because this solves my problem in terms of asset allocation. Now let's say if Ashok, you are extremely aggressive, right? And you think that this 20% allocation to debt is not going to be great from a post-tax perspective. Look at it this way. The next time the market falls 20-30%, and which it can fall whenever, right? Use this as additional investments that you might have to be able to buy equity lower, right? Because whenever the market falls, irrespective of how bullish you are on the market, it is generally seen that you will never have more money to invest.
Correct.
So if you are extremely bullish or extremely aggressive, right, and this pinches you that why am I putting in a non-tax effective investment, become more aggressive when the market falls and remove this money and put this in equity when the market falls.
How much is the percentage allocation I have to put it in debt?
So within debt, what we are seeing is that you have to put 19% in debt, which is about 43 lakhs. And that, as per Kirtan Shah, you can divide that money half into the long-term debt funds,
long-duration debt funds, and
the remaining half in
credit risk funds.
Credit risk funds. Got it.
Sure. I'll do that.
Crypto. Again, it's depending on your comfort level. I would say a simple basket of Bitcoin and Ethereum. If you want to take that risk, 2 to 3% of allocation into crypto, because Bitcoin, as of making this video, has already crossed the $100,000 mark. So if you want to experiment with your money, you can still do that. Cool. So that is about it. So what I will do is finally, because you don't have to save anything for any financial goals, we will just write here legacy. Right, making as much money as possible, and the SIP that you can put over here is the 1,03,000, right? That's it. And this will be a long-term goal, and this will automatically tell you how to divide the money. So this will be your running investments going forward. This is how you'll divide the money across various assets, and within that, like within equity, let's say 61,800. You will come here. This is 61,800. How will it be divided across various mutual funds? This is just your current ones. I would say based on whatever recommendations Kirtan Shah has said, you can optimize it accordingly, right? And you can this SIP will be divided across the various mutual funds that you select, and ensure that whatever mutual funds you select, the allocation across large cap, mid cap, small cap is 33% each. What is your feeling right now? What are you thinking?
I'm feeling happy.
Feeling happy? That's how it should be. Money should make you feel happy.
I know that I'll be able to generate a good corpus, but the only worrying thing upon my mind was taxation. So sir told me taxation need not to be worried. I'll be able to happily achieve whatever I thought.
Fantastic. I hope tonight's sleep is going to be good then.
Yeah. Thank you.
Perfect. Thank you so much, Ashok. Thank you for giving us your time and giving us the opportunity to help you with your finances. I'm sure thousands of people who watch this video would have learned a lot from this. And guys, if you want to come on this video so that we can help sort out your finances, the link is provided below so that you can fill up that form. But you have to be a 1% club member, because this is exclusively for 1% club members that we give this opportunity to take out time from our busy schedule so that we can sit with you and understand where you're going wrong and what can be improved. All right. Thank you so much, guys. If you have any recommendations for us on how we can make this financial planning session better, please put out your recommendations in the comment section. What do you want to say, Kirtan? Anything on a closing note?
I'm just hoping that with all the work that you do individually and the 1% Club is doing, I think we'll all collectively be able to make India financially more prudent.
That's right, guys. Thank you so much for your time, and we'll see you in the next one.